In this video, we will talk about a very important subject, which is why all traders need to know volume behavior. Here's an example that recently happened. It was expected for the euro to bounce back down since the long-term trend has been down. But this is the dilemma that a lot of people, a lot of traders fall into. The precision. Now, let's assume you are using Fibonacci's. I use Fibonacci's too, but I use them as a supplementary addition into my volume profile. Let's assume that you're using Fibonacci and you drew your Fibonacci's from here to here, and you realized, the market's already touched 78% retracement. You don't see anything here. Possibly you do. I don't know. Maybe you joined the market earlier before from this line. We don't know. So probably you would leave it alone, and then you'll push your Fibonacci. See so far you are not sure what is the main resistance. You're probably continuing to go long, which is reasonable. Then you take your Fibonacci's from this top here. You say maybe this is a valid top, right? And you point to this line. You say this is a level that if the market comes to it, this is a good resistance because this is a Fibonacci level. Or maybe you point to this line, this high, and this is the level that is above the 62% retracement. If it breaks it, it might come back up to this level, and this is where you would think about the trade or shorting the market, and maybe here, right? And you would say, oh, this is even better because now I have 62% retracement, right? At here, at this line, and previously we had another level sitting at the same price. So you would emphasize on this level more, the first one. Or maybe you would think, why not picking the very high, which is here, and therefore this is your main level. This will be another level that you look at. Now, when I say why all traders need to know volume behavior, because it is a map. The more you use it, the more you believe in it, the more you see it. It will give you a clear picture of, the safest levels, the areas that the market has more emphasis on rejecting versus, continuing in. So let's see what happened. I'll move forward with this. See, it touched this level. You see the wick, it bounced slightly, yes? And then it bounced mainly from the second level, right? So the idea is, you have three levels. You're not sure, but it bounced from the middle level. The first level had Fibonacci's twice on it, two different levels of Fibonacci from two different highs, and you saw that. Yet the market did not react to it. And if I move it further, you see the market. This is on a weekly chart, so this move was huge. And you would see that at one point it stopped at this level. Now let's look at why would I have picked this level, the middle level, ahead of time. Let me bring volume profile into this, or volume behavior, see what happened. If I bring it in, you see I'm just pressing Control plus because I hit it for the purpose of this video. And if I you see this is one leg of movement, this is the second leg. It's not enough information especially for the swing trading, for the swing traders. So if I bring more and I remove my distracting lines here, it's evident that this line would have been more favorable. Of course, there's detailed teachings about this, which we can help you definitely with that. But this is a throat between the two major levels of volume profile. Right? These are the two major clusters of volume profile. In between, you have this throat. And you notice how the price tried to poke into this and then bounced back down. So this is, in terms of strategies, this is one of the main strategies that volume profile users or volume behavior users would pay attention to. If you are not used to volume profile or using volume behavior, you are not aware of this. Now, that being said, of course, this is on a weekly chart, right? And it's coincidentally it stopped at you see from this top to this bottom, it stopped at a 62% retracement to the tick. If you noticed, you see that. Now, if you look at the daily, the behavior, let me remove this. It also looks kind of vague because, we have a power line, which is another indicator that is based on volume. We have power lines. But if you look at volume profile, let me bring in volume profile, Control plus. You see? And if I bring more volume in, more candles in, now it's more evident that the market, the price got rejected right from this here, which is an entrance into the next major volume cluster. So this is the next major volume cluster, and the market rejected it. Now, this will give you two things. When the main thing is pinpointing the reversal area more precisely. The second thing is knowing your stop loss, knowing your risk, because if you had if the market had gone through this just above this area, but by a little bit, it would have gone through this easier, because this is a continuation zone. We call this a continuation zone, right? So this would have been a continuation, C for continuation, right? So you knew ahead of time the stop loss, because if the market gone up above this line, you would have been taken out regardless of where your stop loss would be. That this is the general behavior, okay? And for this example, there's another importance of using volume profile. It's not only this, it's also the target. Folks, the target had to be right here. So from here all the way to here, do you see the difference between volume profile cluster here and here versus this whole area? This is what we call a suction tube, continuation zone. This is also a continuation zone. This is also a continuation zone. But the continuation zone in the middle, it's called a suction tube. The market would usually behave in a way it continues. So this would have been your target. So some people would have gotten targets here, maybe. Let's say they got 100 pips, right? Pips. However, they have left a lot on the table. They had left 3 times more or 4 times more on the table, not knowing the behavior of the market when you line it up against volume profile, right? So it is very important, even if you look at the hourly chart, and this area was very important for us to monitor, right? Let's look it up. Now, some of you would say, oh, this behavior, this cluster here that actually the market behaved sideways through it, which if I mark it, it's created, of course, because of the market went through it multiple times and it created volume. Yes, that is true. But it was evident even before the market went through. Let me show you. So this is the cluster, right? Let me take these legs out of the picture. See that? This is before. So it was evident there was volume here from previous moves. Look at this cluster. Even if I take the current movement out of it before the market reached it, it was evident that you see, it was evident that we have a level here that the market would react to. So it is important to know, and you see this is the major level of volume that the market would be attracted to because it's big. So leaving money on the table, leaving trades or taking the trades out of the picture sooner, it will also cost you a lot of profits, correct? So it is important for us to know volume behavior, and it is important, I think it's important to have indicators that are volume based involved within your strategy. Look at now the market is stuck between in this volume cluster, doesn't know what kind of a movement is going to happen, so you leave it alone. because if you get into short or long, your stop losses have to be somewhere around above or below. So this, if you're going long, your stop loss has to be in this area, which is big. If you're going short, your stop loss has to be somewhere in this area, which is still big. So you have to leave it alone. Having crossed power lines, this is another indicator that is volume based. These power lines, and we have videos on that too, they will give you an indication that there will be a sudden move here, a sudden big move. You have crossed power lines. It could go up or it could go down, but it will be sudden, and it will be a kind of big in comparison to this chart, which is an hourly chart. Okay, so it is important to know volume behavior. It will help you tremendously, and you can learn more about it. Just contact us.